What's going on, everybody? Welcome to your midweek check-in where we're going to go over SPY, which is the S&P 500 ETF, and we're also going to go over some other notable names on the market. We're going to go over these stocks on the daily time frame and the hourly time frame. That way we get an idea of what's happening on the macro picture and what's happening on the micro picture. But before we get started, let's talk about some important things that happened this week already that have influenced market direction. The most important being was the release of the CPI report, which showed that inflation actually increased between the month of January and February. So this report came out on Tuesday, which was yesterday, and you can see that markets reacted positively despite the fact that inflation went up. So something to understand is that sometimes markets will price in a report before it comes out. That's because insiders already know the information that's going to come out, or it may take them a few days to react to this report. So you can see that on Friday, between Friday and Monday, the market dipped significantly, and that was likely in preparation for that CPI report to come out higher than expected, in which you can see after that the dip was bought up. And so now we're wondering, where are markets going to go next? If you are looking at SPY in specific, although we had a really big dip on Friday, it doesn't mean that we are ready for a trend reversal. Something that we're seeing happening across the market right now is that we're seeing technology stocks, such as the ones that are listed here, starting to pull back, and you can see that they're all nearly ending in red today. However, other sides of the market are starting to perk up. Stocks such as energy stocks, you can see the energy sector has been rallying while technology stocks have pulled back. Gold and precious metals have also began moving up. And you can also see that Chinese companies such as JD and Baba are starting to push up too. And so something I want you guys to realize and think about is that although SPY and other technology stocks are usually the most popular to trade, and yes, they offer a lot of opportunity, sometimes these stocks have ran themselves into a point in which they need consolidation. This doesn't mean that they're ready for a full-on reversal or a full-on market crash. It could just mean that while they're correcting, other sides of the market are starting to push, and you need to look for opportunities in those sides of the market. But back to SPY, if you are looking at the index specifically, you may have realized that over the last 5 days, it has gotten considerably harder to catch a trend on SPY in specific. And the reason why is because SPY holds 500 different companies. Some of these companies, such as the ones we've already talked about, have already ran and are ready to pull back. However, some other companies are starting to now gain traction. So as these gain traction, as these pull back, SPY is going to continue moving up in a very choppy manner, pushing some while others pull back, and SPY will also move accordingly. And so that could explain why SPY is having such a hard time picking direction. But nonetheless, even through all the choppiness, if we zoom out, we can see that on the daily time frame, SPY is once again projected to close near the all-time highs and is likely going to continue push higher. Now, if you've watched our videos over the last several weeks and several months, you know that we have been using the 10 and 20-day moving averages, which are the blue and purple lines here, as support guidance. So every day you look at the market, you want to look at where that daily candle opened and closed in relation to the 10 and 20-day moving averages. This is important because if you look back, every time we've come back to those levels, the 10 and 20, we have bounced back higher. And 3 days ago, we did that as well, pointing to a sign that we are likely going to push even higher. So now that we've looked at the daily time frame, let's go ahead and zoom in a little bit to see where SPY is trading on the day-to-day or on the hourly. On the hourly time frame, you can see that 518.22 remains to be our all-time high. This is a place where we got strongly rejected and we got sent back down towards 507.70, which means that this is the point in which buyers need a break out of in order for this rally to continue. Now, to the downside, throughout this week so far, we have created a support at 513. And so if you're looking for a place to hold a support, or maybe you're in a short-term position and you need a safe stop loss, 513 is going to be a good point. However, we are still going to remain bullish on SPY as long as it holds that 504.40 mark. Our most bullish territory is going to be above 513, but even if it pulls back all the way to 504.40, we will maintain our bullish outlook, but we will stay very cautious. So now let's move on to the next stock on our watch list, which is going to be Tesla on the daily time frame to start. And you can see that on the daily time frame, and this is why we always like to start off with the general trend, the macro picture. There's clear weakness in Tesla. The stock has been making lower highs month over month for almost a full year and lower lows, with today being the lowest point it has closed in quite some time. So with that being said, as we mentioned for SPY, let's check to see where Tesla is trading in regards to its 10 and 20-day moving averages. And you can see that Tesla is clearly trading below them, meaning that sellers are in control of the trend. Even on Tesla's attempt to move back above those levels, it only lasted about 2 weeks before sellers took the trend again, and they're continuing to send it further down. And so if you are looking at Tesla's shorter term time frame, here are some levels that you need to focus on. First of all, we don't really see much support for Tesla until about 164.50, and the support that follows is going to be around 152, which is right around this point of reversal from April of last year. Since this reversal point was a reversal point that sent Tesla rallying for months to follow, this is becoming a very pivotal point. And if Tesla breaks below this level, then it's going to see a landslide down. This is a little bit of an aggressive bearish target to start, so make sure you check back in because we will be updating these levels in the videos to come. Now the next stock on our watches is going to be Apple. To start us off, let's go ahead and take a look at the daily, where you can see that Apple, like Tesla, is suffering the same fate, and it's trading below all of its healthy moving averages, the 10 and 20-day moving average included. You can see that the last time that Apple tested the 10-day moving average, it gapped down lower and continued to sell off. Here we are once again retesting the 10-day moving average, and unfortunately on this retest, even on that attempt to break out, it got sent to close at the lows by the end of the day. And so if you are looking at Apple on the shorter term time frame, let's go ahead and take a look at some levels, and let's draw these levels out together. We purposefully left this chart blank, that way we can draw these levels out together. The first support we're going to have this in place is going to be the lows here at 168.50. Let's go ahead and place those lows at 168.50. And the next support is going to be right here at this reversal, which is going to be right around 165.60. So here we have our support at 165.60 and 168.50, which means that if Apple breaks below these lows, it is going to fall towards that 165 price target. Now in terms of resistance, we're going to use the highest point of this consolidation as resistance, which was right here at 174.35. So let's go ahead and place a resistance at 174.35. This means that buyers are going to need a breakout above that to start moving towards the next resistance, which is going to be right here at the highs of this candle at 176.90. So the next resistance is going to be 176.90. So here are the levels to focus on for the short term on Apple. Given the fact that its daily candle is trading below the 10-day moving average, we expect the stock to continue seeing more downside action. But remember that Apple is usually a company that many buyers flow into. It is a strongly bullish company in the long run, so their downside moves are usually very choppy and slow. The next stock on our watches is going to be Nvidia. Now, unlike Apple and Tesla, Nvidia is actually one of the strongest stocks on the market right now. In fact, it is leading the market in gains. Nvidia in specific is trading above its 10 and 20-day moving averages. You can see that yesterday, Nvidia came down to retest the 10-day, and it successfully bounced above it and closed near its all-time highs. Once again today, it came down to those lows and still managed to close strong. Now, if you are watching Nvidia on the shorter term time frames, here are the levels you need to focus on. We started off the week having a resistance at 901. Obviously, Nvidia was able to close above that 901 resistance today. You can see that it struggled to get above it in the beginning. It tried here, failed, it tried here, failed, but then by end of day, it managed to close above it. And so now we need to see the highest points that Nvidia got rejected at, and if we look at pre-market trading here, you can see it was 936.60. So we're going to move our resistance here to 936.60, which is going to be the point in which buyers need to break out of in order for Nvidia to continue this rally. Now the lows of today were right around 884, so we're going to move our stop loss to our support point to 884, and here we can place another support at 884, and anything above that we're going to consider bullish. If you are bearish, you need to break below 884 in order for it to continue its downside move. However, Nvidia is one of the strongest stocks on the market, so probabilities are that it will continue trying to push higher. The next stock on our watch list is going to be Meta. Now, Meta got some good news today after the TikTok bill passed. However, the stock couldn't hold the rally despite the good news for the company. So let's see what's happening with Meta on the overall picture. We can see that Meta is still benefiting off of its last power earnings gap up. Remember, the stock or the company, they introduced a dividend on their last earnings, which is helping sustain buyers. Buyers don't want to really let go of Meta after the dividend introduction. So in this case, if you are looking at Meta, you can see that it has been a little frustrating. It has been moving a little sideways, but nonetheless, buyers are in control. Today closed just below the 10-day moving average, but still above the 20-day moving average. So every day, you should be at the beginning of every day checking the daily time frame and seeing where it closed in relation to the 10 and 20-day moving average. Tomorrow, the first thing you want to pay attention to is where it opened in relation to the 10-day moving average, since it closed just below it today. If you are looking at Meta on the short term, here you have a support at 476. That's going to be a big pivot point. As long as Meta is above that level, we are still leaning strongly bullish. There are some new resistance points to focus on. It's going to be 503.40. So let's go ahead and put a resistance at 503.40 for Meta. It needs to break above that level in order for buyers to gain more comfort and push it back towards its all-time highs. So let's finally wrap up by talking about QQQ and seeing where it's trading at. QQQ, like SPY, has been moving sideways, and that's just because of the same reason that we mentioned earlier. Tech stocks are in need of consolidation, which is why we're seeing indexes move sideways. For QQQ in specific, you can see it's trading right around the 10 and 20-day moving averages. Buyers are still in control. Let's go ahead and see what it's doing on the shorter term time frame. First things first, we have a resistance at 448.70. This is going to be the new highest point that QQQ reached, 448.64. Let's go ahead and update that, 448.64, and this is going to be the all-time high for QQQ. We have a support at 433.50, and we have another resistance here at 444. And so we are bullish on QQQ as long as it holds at 433.50, but it needs to ultimately break above 448.65 in order to continue its push to all-time highs. 443.50 is a very critical support because there's an unfilled gap here towards 425, and so a break below 433.50 can sharply move QQQ to fill this gap down. So that's just all we have for you guys. I hope you guys enjoyed this video. Make sure you check back in and don't forget to subscribe.